Good morning, everybody. It's Monday, January 23rd, 5:39 a.m. Central Time as I speak here. March corn futures down 4.5 at 671 and 3/4. March soybeans down 14 and 3/4 at 1491 and 3/4. March Chicago wheat down 7 1/4 at 734 1/4. March Kansas City wheat down 9.5 at 838 1/2. March spring wheat down 5 3/4 at 907. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, subscribe, like, comment. All of those things will help YouTube to help me to grow this channel. Appreciate it as always, guys. If you'd like some additional information from me, visit my website, www.standardgrain.com. Check out my premium subscription service today. I send my premium subscribers a ton of information direct from me every single business day. Morning email goes out about 5:30 a.m. Central Time. In that email, you'll see every overnight headline you need to be aware of. Charts, graphics, weather information, all of my grain marketing recommendations. My daily subscriber-only videos are part of this package. I ran an acreage survey among my subscriber base last week. What are your intentions for 2023 as it relates to corn and soybeans? On Friday, I ran through the results. I was joined by my friend Chris Barron. We wanted to kind of see if the results of the survey lined up with what he was seeing on the budget side. This was a good kickoff to kind of the acreage battle season. I'm going to be doing a lot more acreage videos over the next several weeks. If you guys are interested in this sort of content, sign up today. $50 a month. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, I promise. Rains fell over Argentina this past weekend. A good chunk of the country's corn and soybean areas saw amounts totaling an inch, 2 inches, 3 inches, 4 inches. Some of these amounts on my screen here I think may be wrong. The stuff indicating 8 or 9 inches. I think there was some bad weather station data. I know that there were some high winds and some flooding in some areas, so some of that stuff could be close to reality. I'm not quite sure. That weather station data can sometimes be unreliable. But they did catch rain over the weekend, and there's more rain in the forecast. Argentina is going to be mostly dry here for a couple of days, and then Wednesday or Thursday this week, you've got rain slated to return. The Euro model indicates that widespread rains will hit corn and soybean country through February 1st, and the GFS says maybe even beyond that. So I think that a shift in the Argentina weather situation is largely responsible for the weakness in the markets here today. Both old crop and new crop soybean futures gapped lower on last night's open. You look at this Nov bean chart that I've got on my screen here, and this does not look healthy. Nasty gap last night. You're kind of trading below this trend line, which has been in place for a while. Not a good looking deal to start off the week here. Meal market also trading its lowest level since, I believe, December this morning in spot month futures. Export sales improved last week. To give you some good news, USDA released a holiday delayed export sales report on Friday. U.S. exporters sold a net total of 1.13 million metric tons of corn in the week ending January 12th. Japan and Mexico, the largest buyers. That was the best week of corn export sales for the current marketing year since November. Wheat sales were also greatly improved at 473,000. Soybean sales okay at 986. China was the largest buyer there. The corn sales, despite this pickup in business, are still problematic, generally speaking. Accumulated corn sales to all destinations for the current marketing year on the export market are still down 46% versus the same period last year, and a lot of that is because Chinese purchases of U.S. corn are down 67% versus the same period last year. So the corn thing still is a big glaring problem to me. I know USDA cut their estimate last month or earlier this month. I think they're going to have to cut it again. Large money managers added to their net long in the soybean market and also in the corn market in the week ending last Tuesday. So CFTC had its weekly commitment of traders report out on Friday. That data is accurate as of the 17th, which is last Tuesday. In that week, funds were net buyers of 35,000 contracts of soybeans and were net buyers of 49,000 contracts of corn. That's kind of interesting. So you had this big buying spree through the week ending last Tuesday, and you've got some pretty hefty net long positions in the corn and soybean markets as of last Tuesday. One thing that's interesting to me, if you recall, to start off last week, we started off last week's session. It was last Tuesday after the long holiday weekend. The markets were lower, I think, on Argentina weather prospects or forecasts, and we've got something similar going on today. So are the funds going to come in and defend these big long positions, or are we going to see some liquidation here? I'm not sure, but kind of an interesting setup here, certainly. U.S. drought remains an issue, although you have seen some improvement. I haven't run through U.S. weather in a while, so I'll do it here today. USDA released updated drought data last week. U.S. corn areas experiencing a drought have declined to 47%. They peaked at 71% in October. Same thing with soybeans. U.S. soybean areas experiencing a drought, now 39% after peaking at 71% in October. U.S. winter wheat areas experiencing a drought have declined to 59% from a peak of 75 in November. Now, the winter wheat drought is still a big time issue, mainly because your biggest areas of production density, your Kansas, your Oklahoma, your parts of Nebraska here, your key HRW wheat areas are still very much drought stricken. You've seen a lot of relief in your SRW areas of the Midwest, but these HRW areas in the Southern Plains are still very much problematic when it comes to winter wheat. I know that the market doesn't seem to care about this right now. The wheat market has really struggled. But once we start to see, some crop ratings in April, once the trade starts to again take a look at U.S. crop conditions and prospects, it may matter down the road, certainly. Crude oil futures attempting a recovery here. Your nearby March 23 WTI contract trades above $82 this morning. If you get above 82.66, that would be the highest trade since December. You've got some optimism and also some uncertainty regarding China's reopening. Some might argue that the expectation of decreased rate hikes from the Fed have helped to rally the oil market. Some also citing a weak U.S. dollar. National average gas prices up to $3.42 today from $3.10 a month ago and $3.33 the same date last year. So if you were to see a continued move higher in crude, that would translate to higher gas prices. That could result in hotter inflation data down the road, which has a million different implications. Here's a crude chart. This is a daily continuation of WTI. The way I see it, at least based on my very simple look at the chart, you get a move above like $90, and that really opens the door to some additional upside here, certainly. We had a cattle on feed report on Friday, and it was very much neutral, as expected. Cattle on feed came in at 97% of last year, same as expectations, right on par with expectations. Same thing with placements, 92% on par with expectations. Marketing is just slightly lower than expectations at 94%. Cash cattle was 155 to 158 last week. U.S. dollars about flat. Stock market's just marginally lower. The S&P's down 7. Dow Jones down 30. Bonds off a little bit. Gold's down $2. Crude oil up 44 cents at 82.08 in the March WTI. Have a great week, guys. I will talk to you same time tomorrow.